Well, the FTSE JSE Listed Property Index gained 53.1% over the past 5 years, providing investors with healthy returns. But the run has been losing steam and the index is down nearly 12% over the last 12 months. However, Resilient is one of the largest JSE listed real estate investment trusts, also referred to as a REIT, which has bucked the trend, returning nearly 32% to shareholders over the last year. Joining us now in studio, in our Cape Town studio that is, to discuss the outlook for Resilient is Finweek contributor Moxima Gama. Good to have you with us today, Moxima. Let's pick up on Resilient and top of mind, just some of the key features that actually make this company stick out from its competitors. What is it that's working for Resilient?
Okay, well, as you had mentioned, it is one of the biggest real estate funds listed on the JSE. I mean, they're sitting at a market cap of about 40 billion rands. They've got very good financials and a sound investment strategy going forward. But I mean, one of the reasons why investors really love Resilient is because it's just got this consistent above inflation income growth, which comes from their property assets. So, I mean, that's like from rent that comes from their property assets. So they kind of have consistent financials and dividends, as well as, predictable ones, unless otherwise. So that's why the investors really, would dive into the share.
Looking at the company, it has committed about 4 billion rand into the Nigerian market for the development of malls there. Is this a risk or an increased opportunity for the organization to hopefully see a bigger return on its investment there?
It is good because it's kind of like an offshore investment, which is beneficial for both the company and shareholders. This is particularly when the rand does fall, and at this point it has depreciated. So how it works is that the costs are in the costs or the expenses are in rand, and the profits are in dollars, and it would be dollars in this case because of Nigeria uses a dollar-based company. So this would obviously then inevitably increase their performance. But they're also kind of getting into a very fast-growing economy, which is pretty good for the long-term strategy, because it then leaves room for their profits to also grow.
If we do take a look at recent developments at the firm, they did have a rights issue at the moment, looking to raise some kind of capital, but also the valuation of the stock is quite steep. On the rights issue, your outlook on the impact it will have on the company and its performance going forward, together with the share price valuation, should we wait for it to dip slightly before seeing a buying opportunity here?
Okay, firstly, I've kind of maintained that it is a sound or solid company, and raising this money is pretty much indicative of their success, and shareholders seem to be quite amenable to this. So in the long term, I would say it is a buy and hold, but as you had mentioned, that it's a matter of when to get in, and at this point it does seem a bit overextended. If you particularly look at the monthly chart, the upside has kind of lost a bit of steam and is looking a bit on volatile territory. The steeper uptrend is still intact, but it would give in at 99.50, so that would be a level you really want to be cautious about. And below that, it could then dip to 88 or start gradually correcting to the 86 levels or even 70. So in a way of wanting to enter, you wouldn't really enter it unless it bounces on that steeper trend line. But if it goes below 99.50, then you would really want to stay out of it. So this is a short-term correction, which would then obviously, once it does, then at least rebound from that correction, it would give you a good buying point for the long term. But at this point, I'd be really wary of getting in because it is overextended, and particularly because the RSI is also kind of negatively diverged and it didn't support its peak previously. So the warning signs are quite oblivious, but we just need to keep track of that 99.50 level.
Moxima, thank you so much for your time today and your analysis of Resilient, the listed property REIT. That was Finweek contributor Moxima Gama. Up next, we unpack this week's cover story.